viewers, if you don't know, RenewEconomy is a website which is Australia's largest renewable energy website. It focuses on clean tech and climate policy. And we're actually pretty close to being we're almost one of the largest in the world now, which is pretty amazing. We've got about 120,000 people visit the website each month. And we've got a very strong following in the industry in Australia. So in the last month we had about 400,000 page views, which is pretty good for a niche publication. And it's free, so if you haven't signed up and daily news in your inbox. And there we go. Look, I'm also going to talk about disruption in the same way that Nigel did, but I'm just going to take it sort of a broader perspective. And I guess, you know, when you play sport, you want to know who your enemy is and how they sort of see you and what they're thinking. And so I'm going to look at that, and we talk about solar and its disruption in Australia and in the markets here, but it actually has a much broader impact, and it's probably important to understand that so you can think, well, this is why they're really pissed off at the industry and why they're trying to do everything they can to stop it or at least slow it down. Now, this is a price graph that we're all very familiar with. It's the fall in the cost of solar PV over the last 30 years, and it's been quite dramatic. I mean, that's why sort of 30 or 40 years ago you hardly had anyone putting any panels on their roofs. Just a couple of early adopters and fascinated people. And then it came down pretty quickly, and just in the last 5 or 6 years it actually looks like it's flat. But that's actually a 70% fall, which has probably taken us from having a couple of thousand rooftop installations in Australia to 1.25 million. And so the industry looks at that and they go, oh, solar, it's sort of done its big price fall, it's not really going to go that much further. But this is what the last few years, at least, where it's getting a bit flat, looks like to the global oil industry, liquid fuels industry. And that's that line down the right-hand side there. And that's a multi-trillion-dollar industry. So basically solar, if you look at that sort of the right thing there, it's come from nowhere 5 years ago to being competitive of costs in that industry. And that is a massive disruption. If you think their volume for the coal, the Brent, the LNG, what have you, is about between $4 and $5 trillion a year. And solar is going to come up and disrupt that. AllianceBernstein put this graph together, and they are a very conservative investment bank in the US, and they called it Welcome to the Terror Dome. And the implications of this are important because you see where it's intersecting the blue and grey lines at the bottom. That means that solar is now cheaper in major markets across the world. It's cheaper than diesel in large parts of Asia and Africa and the Middle East. It's cheaper than burning oil in the Middle East. It's cheaper than LNG imports in the rest of Asia and elsewhere. And it might only have 1% of the market, in fact less than 1% of the market now, the global liquid fuels market or the global fuel market. But the point that AllianceBernstein made is that the cost is not going to suddenly stop there, it's going to keep on coming down. And the cost of all those alternative fuels is actually going to keep on rising. And once the finance industry figures this out, the people that control the major leaks of capital that flow around the world, the trillions of dollars, they're going to be worried about energy price deflation, which means that they will no longer support, or possibly no longer support, the oil industry, for instance, invested $750 billion last year just trying to find new reserves. And it didn't actually find anything that was actually cost competitive with the new technologies. They could be actually dug out of the ground or exported for less than $80 or $100 a barrel, at which point they make no profit. So with energy price deflation, the big capital funds in the world don't actually wait until that actually happens. They wait until they anticipate that, and then they start shifting their capital. And when they start shifting their capital, it's like a herd of, like a stampede of buffalo. They all move at the same time, they all shift their capital. And what that does, in turn, is that it lifts the cost of the incumbent fuels, and it lowers the cost of the new technologies which are competing with them. So what we might see is that there's going to be a massive and rapid change in capital, and that solar cost, when it comes down, when it's got a 2 or 3 or 4 or 5% market share, it's going to start to have the impact that it's already having in Australia in the wholesale markets, and I'll show you that later on. So that is the broader picture, and that is a that's something for them to think about. Here we go. What we do know is something that Nigel has talked about, that's the impact on the stationary generation. So the last one was more about liquid fuels and fossil fuels exports around the world. This one's about how stationary energy deals with that, and it's Germany. They're probably the furthest along the track. Well, actually, probably South Australia is probably even further, but Germany's a big market, the biggest economy in Europe. And you can see on the left-hand side, in 2012, solar and wind was starting to have a little bit of an impact. It was sort of taking that space where gas used to fill in, or fossil fuels used to fill in on the peak in demand, and it was sort of clipping the peaks there. On the right-hand side is what it looks like in 2020 at the current rate of installation. There's a lot of talk about what's happening in Germany, whether it's successful or not. There's a lot of talk about the way they structure their market, but there's no talk actually about going backwards. They've still got a 65% renewable energy target by 2035. They're still going to be putting a lot of wind and solar in. And by 2020, you can see that wind and solar are going to have a major impact, to the point where the old baseload paradigm is basically shifted. It's come to an end. They have to think of two different ways. They either have flexible generations, they have gas, or coal. Some of the new coal plants that have been built recently actually fast start and fast close down. They can actually sort of ramp up and down 500 megawatts very quickly, but there's not that many of those. Or the other way to do that is possibly with storage, and you can probably even out the load and the output of the variable renewables, wind and solar, to manage that. But that's basically telling a whole bunch of generators that have been sort of sitting in prime place the last 30, 40, 50 years that your time is at an end, and variable renewables and with a mixture of storage are coming through. And I think even The Economist had a story about a month or two ago, noting that about $500 billion has been written off the value of the baseload generators in Europe, just pointing out how badly affected they are. And they're still fighting back, but they know it's a losing battle. Here we go, and this is the actual peak. This is actually taking us over in America. And the interesting thing there is the same thing. At the top there is 2012. That's how the load is for the day, a typical day in California, and then each subsequent year is the increasing impact of solar. We've already actually seen this in Queensland. Anyone been to an Energex presentation recently? And basically it's the same thing that's happening in Germany. You're taking out through the middle of the day that capacity, which basically means that baseload generators have to slow down, or they have to take themselves out of the market, or they have to accept a much lower price. The interesting thing there is the peak at the beginning, and particularly at the end of the day, it doesn't actually take that much storage to come in and actually smooth that peak over and take that peak away. And that's the opportunity there, and that's why the price driver for storage. Here's another one about, and now we're back into South Australia. So South Australia's probably got the highest penetration of wind and solar in the world, actually. They open a new wind farm this month, and so they're at 40% variable renewables in their grid, which is pretty amazing. No other country is anywhere near that. Denmark's probably got about 30% wind. South Australia's got 1 in 4 houses has rooftop solar, and it's had a really interesting impact. This actually comes from the grid operator, and it noticed that this is the network operator, sorry, and it just showed how solar had just shifted the peaks. There's a comparison between the last heat wave in a couple of years ago and the most recent heat wave in January this year, and you can just see that difference between the yellow and the blue line is where the generators used to make all their money. And the interesting thing about that is they can probably accept a lower price, but they didn't actually it gets back to this issue about the financial models. It's not a technical problem, it's a financial problem. Most of those generators changed hands in the last 10 years, and when they were bought in the expectation that demand would continue to increase, that the market would stay operating as it had been, that they would actually get 1/4 of their revenue from about 36 hours of peak trading during the year, and that they could actually hook themselves to debt, up to the eyeballs in debt, and meet their interest payments that way. But solar's actually taking that away. It's eating their lunch, it's doing more than that, it's probably eating half their dinner as well. And it means that in the case of the brown coal generators and the black coal generators, some of them cannot meet their interest payments, and I don't think there is hardly a black coal generator in the country that's actually making any money at the moment. Which is why they all, to a man, have wanted the renewable energy target removed, and particularly the small-scale component. And this is Bloomberg New Energy Finance. This is actually looking at what's going to happen over the next 15 years. They say that solar is going to dominate in Australia. So there will be no new coal, there will be no new oil. There may be some gas in about 5 years' time, depending on the need, and that'll probably be used to replace some of the coal-fired power stations which have gone out, and that'll be only be brought in to do maximum flexibility, and that may depend actually on how much solar thermal is actually with storage is brought in. There certainly won't be any nuclear, despite the fantasies of some people. There'll be no new hydro, there'll be no new geothermal or biomass. There'll be some wind, but if you actually look at that chart quite closely in that big blue bit, might be a lot of wind built over the next few years, but then it gets overtaken by utility scale solar, which is the next one up. So by just before 2020, new wind installations basically stop, comes to a grinding halt, and you get utility scale solar because solar PV at 20, 30, 50 megawatts and even bigger competes on cost. And so that's where a lot of meeting the RET and also just new installation comes from. And as they say, it will continue on solar PV, rooftop PV, on commercial and on residential. Now there's a big debate about that, about how much of a knock solar PV will take if the RET is removed and the ESRES disappears. You know, is it going to be 10, 20, 30%? Is it going to be 50%? If it's that high, how quickly does the market recover? I guess that's unknown, but I think over the long term, some way, in some form or another, the market will continue to develop and be quite big. But anyway, that's Bloomberg New Energy Finance point of view. And I think this might be getting towards the last one. This is an interesting one here. I wrote an article on this in The Guardian a couple of weeks ago, and for a whole day it was the most read story across their network in the world. It got more than 500,000 page views. It actually beat the World Cup on interest. And it basically said this, it just sort of pointed to the fact that the wholesale price of electricity in Queensland actually fell below zero in the first 2 weeks of July. The most dramatic one actually happened when actually $100 below zero at one stage. That probably wasn't entirely solar's responsibility. Actually, it's probably more to do with bidding patterns. And it's a pity the next day actually showed that during the afternoon it came down to zero at it came down to zero, so 11 o'clock, went up a bit and came back down at 2 o'clock. And that's because solar was accounting for about 10, 15% of demand in the state. Now, there has been zero pricing events in the past in the wholesale market, but they always happen at night time. You have so many baseload generators switched on, people are in bed, they're not using electricity very much, and that's sort of part of the routine. That's why they invented off-peak electricity in Victoria, to try and give the coal-fired generators some demand and something to do during the evening. The fact that it's going down close to zero during the day is amazing. Now, whether or not it was entirely the fault of solar, or whether it could have been accentuated by some of the bidding patterns that done by some of the players in the market, doesn't really matter. The point that I made in my Guardian article was that even if the price of coal was zero and is zero, it still can't compete with solar. And that's because you take away the wholesale price out of your electricity bill, it's about 9 cents a kilowatt hour. Out of your electricity bill, about 30 cents a kilowatt hour, solar will probably still beat it. And what was really interesting the other day was there was a presentation by a guy from the Institute of Sustainable Future, from Energetics, Gordon Weiss, who has even more optimistic estimates on the cost of solar, and he said, you can actually take the cost of generation down to zero, you can take the cost of the delivery down to zero, and they still can't beat solar. Because if you just have the wholesale price of the cost of solar against the retail margins, and other components of the bill, solar would still win. So that was a pretty interesting point, and it gets back to your issue there about how the networks, their over-investment in the networks, how they're going to compete. And it's one of the big problems in the industry is that Tony Abbott keeps on talking about, oh, we've got cheap energy in Australia, therefore we should keep on digging up and burning coal. Well, yeah, he's right, but as this point makes, he can actually, you can do that for zero and you still can't compete because the cost of delivery to most homes is ridiculous. We're paying $300 a megawatt hour when that's probably the price that remote mines are paying for diesel, and it's just basically a failure of the whole system that they can't actually make it cheaper. And now new technologies come along that disrupts that, and it's really up to the network operators to adapt their models, because they're all bleating about death spirals and saying it's the fault of solar and solar is a free rider. But really the whole narrative should be changed. This is where you guys can actually help, saying, well, no, the householders now have a disruptive technology. They've now got the equivalent of mobile phones, or they've got the internet instead of having to buy newspapers or having fixed line telephony. They've now been given a new option. It's up to you guys to fix your model and adapt your pricing to meet that. And there's an opportunity for them to do that. They can come in, and I see some of the networks actually talking in this way. They actually want to take away some of the market from the retailers, because the retailers have got such a bad reputation and have such a bad relationship with their customer base that they think that they can come in, maybe even buy some of the panels and the storage, put it in the households, or put it in the villages, the new subdivisions, and build their new networks that way. Don't have to have poles and wires, don't need them anymore. But they by themselves and keep their business and their model. Well, they change their model, but they keep their business going in a completely different structure. So it's going to be really interesting to see how that happens. And I think it's going to evolve to the stage where it's not going to be the solar industry versus the fossil fuel industry, or the solar industry versus the incumbents. You're going to start to see some of these people accepting that these technologies have come, they've arrived, they're cheaper than what they've got, and so you're going to see things like the networks competing against the retailers, who basically do nothing much other than package the bills, make it really complicated and take a big profit. And the generators are probably just going to disappear out the back door over time. Because as someone else said the other, Andrew, some research guy from the ANU, he said that if you actually allow all the incumbent fossil fuel generators in Australia to retire at the end of their nominated life and replace them with renewable energy generators, then by 2035 or 2040, we're actually at 100% renewables. So all we're trying to see now is an ability from, or as an attempt by the incumbents to extend the life of their assets and extend the profits of their assets. So there you go, and I think that's the end of my presentation. I don't think I put another slide in. Then, no, I'll go back. Sorry, Darren. Encroached onto your territory. That's it. I hope I gave you some sort of idea about the big things working against the incumbents, and so know thine enemy, but also know your opportunities. All right.
Well, we're blitzing through, so maybe we can take a question now, very quickly. At the back, who's got the mic? Is it Andreas? Oh, there it is.
I'm just interested to understand your calculation about the likely improvement in, or increase in the gas supply to generate electricity, given the international estimates that gas is going to go through the roof, and why would gas come into play in Australia?
Well, the gas generation, I think everyone's predicted, is actually going to fall off quite dramatically over the next couple of years. One, you've taken the carbon price away, which means that the coal-fired generators were going to retake some. So over the last 5 years, we've actually seen a lot less gas generation and quite a bit less of coal. And a lot more renewables. Gas has actually increased, coal has come down quite a lot, gas has actually increased, and so has renewables. So the emissions level has actually come down. That's going to reverse. We've taken the carbon price away. But the interesting thing now is that the price of gas is going up so high that the baseload gas generation is being taken out of the market. There's basically no gas generators operating as baseload anymore. They're operating as intermediate peakers, and they've all admitted that. Some of them actually closing them down, some of them written down the value of their gas generators. So why the prices are going up of gas? Because we're now starting to export. And the export price of gas, or the gas in international markets, places like Japan, China and other places in Asia who don't have much gas of their own and they need fuels, they're paying $15 a gigajoule. And compare that to what Australia used to be, gas in Australia used to sell at $3 or $4 a gigajoule. But now that we've actually decided to export, so the net back price of gas, if you actually take away the cost of LNG, the liquefaction and the transportation, that actually, the net back export price is $12. That's what people will pay, the big exporters will pay to buy gas in Australia so they can feed that export demand. And so it's almost certain that the gas price is going to go up to $10 or $12 a gigajoule. It may not not quite reach that amount, but that would entirely depend on how many holes they can drill with coal seam gas. But even if they sort of double the amount, it might come down a little bit, but most of it's headed to the export market. And that's a big problem. I mean, it's actually been quite badly handled. But that actually should provide an opportunity for Australia. One point I'd make about that is that even in the US, which has supposedly low gas prices, they've also got much lower costs of solar because they've built so much that the cost of finance is that much lower. So they are now removing plans to build peaking gas generators in the US, where gas is actually quite cheap, and building solar instead, because solar there is 6 cents, 7 cents, 8 cents a kilowatt hour, and gas is probably not much higher than that at the moment, but if they build solar, they can lock that price in for 30 years and just take any fuel price risk, and that's what the financiers want to see happen.